Ladies and gentlemen, good evening. This is Christopher Aaron. It is October 31st, 2018. I do want to wish you a happy Halloween today. And unfortunately, on this Halloween, we do have to discuss this topic of silver and is there more pain ahead for us silver investors. On this channel, we evaluate the precious metals in the best way possible, which is through a study of the observable trends and data. We don't simply rely on the fundamentals because, as you know, there can be manipulation in the fundamentals. There can also be other things, other fundamentals going on that we simply don't see, that we will not pick up on unless we monitor the trends themselves in the market. So that is the point of this channel. You've arrived at a good time. We're going to get into this. Let's look at the last 3 days as we've seen this volatility in the stock market and the recovery looks like beginning today. We talked about this last week. The recovery, we expect a short-term recovery in stocks followed by a lower low. And we are looking at how the metals are responding here. So we're seeing a pretty clear inverse reaction in gold to stocks at this point. So the stock market has recovered for the last 2 days, and we're seeing gold lower for the last 2 days. No surprise there. We're seeing a very direct inverse correlation between stocks and gold. Now, when we switch over and we look at silver, we are not seeing quite the same level of inverse correlation. We are seeing an attempt. We saw an attempt by silver to rise with gold, but it really failed to perform on a relative basis. And then in the most intense part of the crashes as well in stocks, we've seen silver underperforming gold. And then now, similar to gold, when the safe haven bid disappears from gold, we see silver falling alongside gold. So it's seeming to get very little of the upside, unfortunately, and all of the downside that gold is getting now. And I want to let you know that if you're a silver investor, I feel your pain. I'm in this as well. I've taken my losses this year as well. And we had some profits back in 2015 and 2016 that helped to offset this. But yes, I've been involved in this market for over a decade now, and I've felt these swings in both ways alongside you. So we are trying to mitigate the damage here to some extent, and we want to look at what is actually happening here in the silver market so that we can prepare a little bit better. The important point to take away here over the short term, we're going to discuss the short-term action for silver here, is that this bottom attempt has failed. So we were looking at the potential for an inverse head and shoulders pattern forming right here. Let me bring up what this pattern looks like. The textbook example of an inverse head and shoulders is shown here. If you can imagine the silhouette of a human being hung upside down with a left shoulder, a more prominent head, and a right shoulder. It's a crude example, but this is how it looks in a textbook. We can see silver was trying to do that here. A left shoulder underneath this $15 mark. A head formation here, a more prominent head, and a right shoulder that has now failed. We see the structure of this fail. Silver has made a lower low below this right shoulder level. We're seeing the trend break at this time, and we're seeing gold move lower with silver. So this is a failed bottom attempt over the short run, and we do have to expect lower silver prices here over the next few months. It appears, in a highest probability sense, I never claim to have the single crystal ball on the planet, but this is a system of evaluating probabilities based on observable trends. And I would argue that it is superior to just picking one or two fundamentals and focusing on those with a neglect for what is actually happening in the market itself. What can we expect now looking at silver? This pattern looks like it has failed. It wants to move lower over the short run. I would not put the possibility of a bit of a counter trend rise here at some point over the next few weeks. It should fail to eclipse the $15 mark. If silver eclipses 15 on a closing basis, we would have to step back and reevaluate this, but this is the highest probability. 15 level will hold, and silver will be moving lower below the most recent $14 low print. And we have an outstanding target for silver of under 13. So keep this in mind if you're planning to make a physical purchase and you're evaluating a question of timing. I would say there's a strong probability that silver will be heading below $13 an ounce within the next several months. And that should be the next chance that we have to really evaluate the potential for a more meaningful low to form in this market. Now, when we switch, we look at some long-term perspectives. Sometimes it's good to look at other markets, other commodities, for example, to see how silver is performing on a relative basis. This can put things into perspective. So let's pull up silver here, 2000 through the present, right? The whole basing process that had been ongoing for over a decade, the gradual rise in the early 2000s, getting very volatile, the crash of 2008, the final major spike here in 2011, and this bear market that we've really been in, the attempt in 2016. Now, below the main chart, we're looking at silver on a relative basis versus a basket of 19 different commodities. And what we can see here, this is a relative valuation. You can see, for example, notice here from 2000 up through 2005, we're talking all the way, the first rise in silver from 4 to about 7. Notice that silver was moving in a flat line relative to all the other commodities. What this means is that this rise into here, into 2005, was entirely attributable to broad commodity strength. There was nothing special happening with silver per se. Now notice what began to happen here in late 2005, 2006, and especially after the crash of 2008 and especially into 2011. What we're showing here is that this rise in silver was unique. It was unique to the precious metal aspect of silver, okay, the monetary aspect of silver. So all commodities did not perform this well into 2011. Silver was doing something special on a relative basis. Okay, very important to pay attention to this, especially as commodities are advancing and declining. So then what can we see? After the 2011 peak, silver basically moved sideways versus commodities for about a year and a half. So this move, the initial down move, was entirely due to commodity selling. And then silver really began to underperform. 2012, 2013, 2014. We can see that here. So this decline in silver was largely, most likely, people who were buying in here who decided to exit the silver market, unique to silver. We're not seeing this type of selling across all the commodities per se. What we can see is a bit of a rise once again in 2016, and now trailing off again versus commodities. So as a net sum from 2000 through the present, silver is still up over 200% relative to other commodities. So I want to say that as a caveat. This is a market that cannot go to zero, and it's already down 70% from its peak. So that's an interesting value proposition there. That said, we're talking about this. We're saying there could be more pain. And in fact, we are expecting more pain in the silver market. So let's just look at an example. Let's imagine, let's look at another commodity. And actually, let's look at another precious metal that we don't talk about that often. Let's switch this over and look at, let's say, something reasonable. And I would say, though, that something that people are not considering in silver right now. But let's look at something reasonable. Okay? Silver is above its 2008 crash low, right? Here's the 2008 crash low, and here is silver presently. Let's switch over and look at platinum. Once again, I said this is a market that we don't examine that often on this channel, but it's a very interesting commodity to follow because there is that precious aspect to it, but it's mostly an industrial commodity. And one could argue that silver has befallen to this fate, unfortunately, presently. Obviously, the long-term thesis is that silver will rise once again as a precious metal. But at the present time, it appears that silver has been relegated to an industrial commodity only. So let's bring up this comparison with platinum. Notice what's happened here with platinum, that it has fallen all the way back to its crash of 2008 lows. So when you see a commodity that's come all the way back to, I mean, you know, if you didn't live through this at the time, the fall from 2,300 down to, you know, just over $700 an ounce within 6 months, this was absurd. This was insane. You know, a one-way train ride lower in platinum and gold and silver, that matter, but more so in platinum on a relative basis. So the fact that platinum has come all the way back down to match a crash low, right? And then we're looking at platinum versus the commodity index below, and we can see that although platinum did outperform to some extent the commodities through 2010, we can see that it's basically moved sideways to slightly lower, but mostly sideways. So in other words, since 2010 here, platinum is just any old commodity. Unfortunately, despite its properties, that's what the market is telling you. It's being grouped in with every other commodity. And we know that the commodity sector as a whole is at 40-year lows. Okay? So platinum has been grouped in with the rest of the commodities, and therefore it has fallen back to 2008 lows. Now, that uncomfortable question that we have to bring up, if we don't want to stick our heads in the sand like the ostrich, if we want to really look at this boogeyman and think about this for a moment and then prepare ourselves, because trust me, it's better to prepare yourself even somewhat and even to entertain these possibilities than to not entertain these possibilities. It's this. What if silver is about to do something similar to what platinum has done here and to match its 2008 low? If you remember where silver was back in the crash of 2008 on a relative basis, it was down at $8.60 per ounce. Okay, so this is what happens when a commodity that had been outperforming the other commodities and then gets grouped in with the broad basket and then has a slight period of underperformance. And unfortunately, we are seeing that same type of development occurring now with silver itself. So some people would consider that impossible, you know, for silver to fall below $10 an ounce. I'm just bringing up this comparison to show you that there is a precedent for this when we look at other semi-precious, but mostly industrial still at this point, commodities. Guys, there are a number of ways that you can stay up to date on this kind of work to make sure you've received all the latest analysis. Number one, make sure you hit the subscribe button. It's on the YouTube video right below. It's that red button. That way you'll receive a notice when we post each of the new videos that come out. Number two, if you'd really like to show your support for these videos, I do want to say thank you so much to those people who have donated on Patreon. Thank you, my patrons, for that. Number three, if you would like to go more in depth, if you'd like to receive all the latest research and analysis, including flash updates that go right to your inbox, we did have one today. An important flash update concerning the gold to silver ratio and some further assessments of what that may mean for silver prices going further, a little bit further in time than the analysis that was just presented in this video. You can find more about that premium service on the website. There's a link to that below. And finally, if you're an individual and you simply want to discuss something related to the precious metals with someone who does not sell the metals, I am an individual investor, and I simply look out for the best interest of individuals in the best way that I am capable of. I do not have the single crystal ball, but this is a logical way of evaluating the markets that can put probabilities in our favor. So please know that you can reach me on the consultations tab on the website. In closing, I just wanted to say two things. Number one, as I said before, it's important to remember that as we're experiencing these declines in silver, it seems like it can't get anything going for it at this time. We have to remember, this is an asset that cannot go to zero. It's down 70% already from the 2011 high, as opposed to individual stocks or individual currencies or bonds, which can indeed go to zero. That's something unique. Secondly, I want to encourage you. This is actually a picture that I took about 5 days ago myself, here in the little corner of the woods where I've been for the last few weeks. And I want to encourage you, whenever we're going through these times, it just always helps me to step away from the screen and to look at aspects of nature. I believe that the markets are a function of human nature. What else could they be? And human nature is in turn a function of the broader sum of nature that lives and exists around us. So I think sometimes when we step out into nature, we can learn things about the market that you wouldn't even otherwise expect until you actually do it. And so, for example, when I saw this picture here and thinking about this, it just made me realize that one of those patterns that we can recognize and we know exists is that after every rainstorm, like was in this picture, the sun does come out again. And so I would say that applies to the markets and to silver as well. Thank you for tuning in, and I will see you this time next week.